clear, I will again explain. So another 10 minutes and then a break. Okay, just let me complete 1 or 2 more slides. Okay. Okay, now the types of risk. ये बड़ा important है. Just look at me. Okay, don't look at the slide at the moment. Just मेरी तरफ देखिए. देखो जब भी आप पैसा लगाते हैं, this is a very important. I'm going to tell a small example, a story, a real story. Okay. Now, whenever you are going to make an investment in a stock or any asset, there is a risk involved, isn't it? Even when you invest in a fixed deposit, there is a risk. The bank may fail. कई सारे बैंक फेल हो जाते हैं. And then you find the other day, next day there is a big queue in front of the bank because bank has stopped ATM. They are not giving any money to the customers. So there is a risk involved in everything. There is a risk involved in government bonds also. Like the Greece government failed to honor the commitment. अपने ही bond जो इन्होंने issue करे थे लोगों के, उसका पैसा वापस नहीं कर पाई. So governments can also default. Okay, though we call it risk free, but actually it is not risk free. Okay, so what happened was about maybe about 15 years back, I don't exactly, but I keep saying 10, 15 because the time is passing. So maybe it was about 15 years back. Okay, and I had ₹1 lakh with me. ₹1 lakh मेरे पास था. मैंने कहा invest करते हैं इसको पैसा. I should invest this money. Okay. And then I read all the analyst report and everything, whatever was available that time. Everything was not so transparent. No chat GPT, nothing, no sites giving you any kind of recommendations as such. Okay, only you have to watch business channels to understand which companies are doing well, or you have to do a lot of research to find which company is doing better and which company is going to do better in future. So I came to the conclusion there is a company called Maruti Suzuki. So the share price was 1,000 rupees. Okay, so I bought 100 shares. How much money I invested? 1 lakh rupees. Okay. Now after a week there was a strike in Maruti. Okay, and few workers died in that strike. कुछ लोग मर गए, employees, and Maruti was closed down. Manesar plant was closed down. Okay. Because it has the main plant in Manesar, it got closed down. So there was an uncertainty. कब खुलेगा, क्या होगा मारुति का, कुछ नहीं पता था किसी. The share price came down to 500 rupees in a matter of just 10 days. How much money I lost? Half of my money. 1 lakh लगाया था, 50,000 हो गया. So that risk is called the firm specific risk. It's called the firm specific risk. It is diversifiable. You can manage that risk. Okay, but I couldn't manage it. I lost how much? 50,000 rupees. Now suppose I would have invested my money in a portfolio rather than buying only Maruti. So somebody might have advised me कि भैया सारा पैसा मारुति में मत लगाओ, invest 5,000 rupees in every company and choose 15-20 companies, so that I will be investing ₹1 lakh. 5,000 in Reliance, 5,000 Wipro, 5,000 in Tata Motors, 5,000 in SDFC Bank. Like this, I just covered about 20 companies. So what I'm doing, I'm diversifying my risk, because even if the company Maruti would have lost 50%, I would have not suffered a loss of 50,000, because maybe Reliance would have done something very good because of its own reason, and its share price might have gone up. So if I invested in 10 companies, chances are that 10 companies would have shown a very good result because of their own reasons, and 10 companies because of strike or death of the CEO or whatever, the company might have, return would have dropped. So I'm diversifying. So that means I may gain something, I may lose something by investing in a portfolio. Okay, which will cancel out, because I may gain in 10, I may lose in 10. Suppose it happens like this. So I'm not going to make any return if I have invested in a portfolio because of the firm specific risk. The firm specific risk जो है मैंने eliminate कर दिया. Okay. Just read this, the top one, firm specific risk, just in your mind. Is this clear? Now the other is called the market risk. Because if I have invested in a portfolio, I should get some return. अगर मुझे रिटर्न नहीं मिलेगी तो मैं क्यों पोर्टफोलियो बनाऊंगा? though I have eliminated the company specific risks because I have no control on company. What will happen to Maruti? I don't know. What will happen to Reliance? I don't know. But market risk जो है वो मेरा कंट्रोल में हो सकता है. वो क्या है? The macroeconomic factors. Suppose I read a report that India is a very good place. Suppose I am sitting in America. They have a good population. The demographics are good. They are going to grow at a very higher rate. India is going to be one of the major economies to grow. It will become the third largest economy. It may become the second largest economy. Its GDP is going to grow. Okay, the companies are going to make profits. So that is called the macroeconomic. Okay, so I want to earn through the macroeconomic factors. So I may put my money in India. And suppose I look at Afghanistan, I am sitting in US, I am not going to touch Afghanistan stocks because it's very risky because all the factors are not good. So that means macroeconomic factors I can always choose. But of course I can bet on, not very surety. Maybe India may not do well, because a lot of, like Trump is doing a lot of things to, make sure that India is not doing well. Currently what happened yesterday, 2 दिन पहले?
The H1B visa thing.
H1 visas, they had actually made a very high entry.
That the employers will have to pay $1 lakh every year.
Yeah.
For the citizen.
For the Indian people, Indians. Yeah, that's okay. So that means something can go wrong also in macroeconomics. So now just read this. Just one more slide and we are going to a break. Is this okay? Read? Okay. Just a chart before we close. Now there are 2 charts and then we end up. So unsystematic risk, which is nothing but the company specific risk, is called idiosyncratic, specific or diversifiable risk, is a type of risk that affects the specific company or industry but not the entire market. Okay. Now if you invest in a portfolio, keep extending your portfolio, the risk will come down, the standard deviation will fall, okay, and you will left with only a systematic risk. Is that okay? Then the last slide, this is the systematic risk, this is the market risk, okay. This is risk due to changes in overall economic situation, the country, change in interest rate, inflation, etc. Okay. This risk is also known as market risk, is a type of risk that affects the entire market of the economy, not just the company or a sector. So the systematic risk will remain with you. Because of that, you may gain or lose. Because of that, some companies are going to do very well, some companies are going to do less effective. So all the companies are going to get